The stock market is heating up. New jobs data showed the most amount of October job cuts in over 20 years and almost triple the amount of cuts during the same month last year. 68% of stocks in the S&P 500 fell today, setting us up for an explosive end to the week.
The SPY closed down over 1%, and we actually saw some explosive selling pressure in the middle of the day today, especially around open, where we saw the selling pressure really start to heat up. As traders, we've been in a blackout period lately where we have not been able to see a lot of the data that would normally release because the US government has been shut down, and we've been talking about that quite a bit over the past few weeks, of course, naturally. But today, traders were really grasping onto data that released from Challenger, Gray, and Christmas. There was actually some jobs data that showed that job cuts were the most in about 2 decades, going back to 2003. So the number came in at around 153,000. That is a crazy jump there. It's a 175% from the previous year, and it's up 183% from September's reading. Again, though, this is coming from Challenger, Gray, and Christmas. It's not coming from the BLS or some type of government entity in that way. So keep that in mind. But as traders, this is something that people really grasped onto today, and it's one of the leading causes as of why the SPY sold off in such a massive way. It's a pretty rough day whenever the SPY closes down over 1% and the heat map looks this bloody, especially throughout the tech sector.
Exactly, because the tech sector is what has been leading the market, and one of the biggest fears with investors right now is if the labor market is going to hold up. And that's the reason that we are even seeing rate cuts to begin with right now, because inflation data isn't as low as many people would like it to be. But we do have some real risks to the labor market weakening, and this data definitely pushes on a soft spot for the market, and it definitely fuels a lot of the selling pressure. So when we look at the market right now, given this bad jobs data, Tom, clearly we saw a good amount of selling pressure. What are you seeing on the charts, and what should we look out for tomorrow? Because volatility is heating up.
Specifically for tomorrow, the low of day from today ended up hitting around 669, and I have support around 668. So I'll be watching that $1 range very closely. If we do see the SPY dip under there, I will start to look at more selling pressure coming in, kind of like what we saw today, but we really saw a good continuation of the downside trend on SPY. I know that we've been watching this downside trend for a couple days now, and as of this morning, we actually had another test of the trend and positive touch and rejection. So keep this trend on the radar. I wouldn't even be surprised if the SPY did end up having some type of green day over the next few days just to test that trend again before ultimately going lower. It's hard to say exactly, of course, which way the SPY will go on any given day, but as of right now, the downtrend is continuing, and one of the biggest levels that we saw today was the 674 range. We've talked about that a lot over the past couple weeks, and it acted as a really good resistance for the SPY today. So I will watch that as resistance for tomorrow as well. But ultimately, if we start to really break down below that 667 to 668 range here, I will be looking for a larger drop. It's more towards 664, which is where we bottomed out back on October 22nd. And if we start to sell off below that, we'll be seeing a pretty massive sell-off. I don't think that we'll get there tomorrow, but I think a lot of traders will be starting to eye up 660 as well over the next couple weeks if things start to accelerate.
Yeah, I would say that 668 level is the danger zone. Like you said, if we break below that, we don't really have too much major support until 664 or so. So definitely keep that in mind. And another key thing to keep in mind as well is what these big tech stocks are doing, especially Nvidia. This has been almost single-handedly carrying the market along with a handful of other big AI names, and Nvidia alone is down just under 9% this week, and it fell today by over 3.5%. So this is having a big impact. Keep a close eye on Nvidia because it is having a big influence in the market's day-to-day moves. On top of that, as we know, we did see a Hindenburg omen trigger recently, and another one just triggered again. Basically, we are starting to see a cluster of Hindenburg signals, which historically is like a warning sign for a market crash. This, of course, doesn't mean the market has to crash immediately, but like we've shown in the past, and as we can see from this data here, normally when we do see Hindenburg omens, stock returns are pretty rough.
Yeah, I mean, just looking at where a lot of these Hindenburg omens have touched before, we've saw some major pullbacks. One of the biggest ones was in 2022. You know, stocks were actually ripping post-COVID to the upside, and then in 2022, we saw that Hindenburg omen hit, and then the market ended up coming down. Keep this in mind. It's a pretty big indicator, and a lot of people have been looking at this data as well as some of the reasons as of why the market could be seeing more selling pressure than usual as more traders grasp onto this and they start to, show more fear and start to sell out of a lot of stocks. And, it makes sense, Mike. Like you said, keep watching the tech sector. Those stocks like Nvidia that have really been falling lately could start to trigger a larger sell-off out of the broader market if traders do, continue to push for that. But Mike, there's a lot going on right now. For tomorrow, we do actually have some Michigan consumer sentiment data set to release. The previous reading was at 53.6. It looks like the consensus and forecast is just under that. So they're expecting a slight dip there. And I would say, given a lot of the negativity over the past few weeks, we might see sentiment come in a bit lower. So be ready for that at 10 a.m. Eastern time tomorrow. And then we do have some earnings as well, like Constellation Brands and Wendy's, CGC, and a couple others. I will say, though, the earnings week is about coming to an end here.
No doubt. And Tom, we have some big news today. We are losing a legend in the stock market. Nancy Pelosi announced her retirement from Congress. That's going to come at the end of her current term. Since 2014, she has been one of the best traders in the market. Her portfolio returned nearly 750%, more than triple the S&P 500. And in 2024, she returned 54% and outperformed 90% of hedge funds. So she truly is a legend.
Yeah, I'm not trying to get overly political with it or anything in that sense, but she's been around for a long time, very famous in Congress nonetheless, and very famous with her stock trades over the past few years. So I can't wait to read all the comments on this one, Mike. I'm sure that we're going to have a lot of fun there. And this wasn't the only big news that came out today about somebody, pretty famous in the stock market. We actually did have some news with Tesla. Now, Tesla's down 3.5%, but shareholders are actually voting to see if they're going to end up paying Elon Musk his $1 trillion pay package. This has been in the news a lot for Tesla recently, and Kalshi is pricing in a 94% chance that this will happen. There's a lot of arguments for this. There's a lot of arguments against this. But either way, Elon has been one hell of a CEO and has definitely boosted Tesla a lot over the years.
Yeah, and of course, he definitely has to meet performance metrics to get the full $1 trillion compensation. But this is just something to look out for. There isn't any major tradable news this second off of it. But as we know, we like to keep everyone informed. And this is one of the most important news events of the day. So keep Tesla on the radar for tomorrow as this vote continues to play out. A final count of this vote will likely come in a few days, filed to the SEC. So we shall see. But besides that, Tom, let's not waste any time and let's get right to some setups and predictions. A stock that is still on my radar is SMH, and it is to the downside. I know we've mentioned this one a handful of times over the past couple of videos, and it has had a great move lower, and the price action is still looking really great. It is still on my bearish radar. I really can't critique it too much. It's been playing out perfectly. We have been seeing more profit taking with just AI and AI related stocks. SMH follows the semiconductor industry, which has been one of the biggest beneficiaries of the AI boom. And considering we are seeing a little bit of a shift in risk preferences in the market right now, in my opinion, that hurts some of these stocks. SMH is still on my bearish radar, and so far, so good.
Yeah, very nice play here, Mike. It's down 2.3% today, and that was an awesome continuation. I know yesterday it went green and had that consolidation day, but turned over again very, very well today, and a lot of people were loving it. With my first setup of the day, I'm looking at Lucid Motors for a possible pop higher. They actually reported earnings on Wednesday, and I like today how they had a good continuation of around 4%. Now, this stock has a lot of room to go. Even though it moved 4% today, their average percent rise is 3.8%. 3.6%. So keep that in mind. This wasn't the craziest day ever for Lucid, but whenever I look at this stock, it did reverse split in the past, back right at the beginning of September, actually, September 2nd. But if we do end up seeing Lucid continue to post off of this support and bounce off of this low range, I will keep watching it back to the upside. It's not something I'm looking at for the ultra long term or anything like that, but while we see some volatility in the market, this actually has a very moderate correlation to SPY, being at negative 0.32. So it'll run with more of a mind of its own, and it doesn't necessarily have to follow the S&P 500 being an EV stock like it is.
Sounds good. Yeah, it's definitely a volatile one. Another stock that is close on watch is URA, and it is to the downside. There was a recent big money trade with this one for the 56 strike put options for June 18th of 2026. It wasn't like the biggest trade ever, coming in at 650,000, but it has been playing out extremely well, and URA is just getting absolutely crushed here, and that trade was timed very well. URA is still on my bearish radar. Of course, this doesn't mean it has to fall tomorrow, but I think especially over the coming weeks and months, there still is a good risk reward playing it to the downside. Either way, it is on my radar, and it's good to see the big money trade working out well with this one.
Yeah, it's testing a major support here as well, around 47, and I would not be surprised if it started to flush under that, considering that there's a lot of pullbacks going on in the market right now. With my next stock, I'm also looking at NVIDIA once again, Mike. I know that we've been calling out SMH and NVIDIA a lot all week long, but if it's not broke, don't fix it. You know, NVIDIA is down 3.6%, and I will continue to watch it to the downside. I will say there will be that inevitable consolidation day where we might see some green price action come in, kind of like what we saw on Wednesday morning. So just keep that in mind. You know, there will be days like that, and if there is, you might have to adapt. But if we see true support start to give out around 185, I will be watching for a good continuation to the downside tomorrow, possibly targeting 180. If we go to Bookmap, there's a really big buy wall around 185 with around 254,000 shares stacked there, and then at 180, there's 236,000 shares stacked up. I know that yesterday we talked about 190 possibly being a good target today. We identified it on the Bookmap, and it ended up hitting and working out very, very well down to that range. It went a little bit past there, but not really all that much. So I'll be looking for a 185 breakdown towards that 180 support.
Sounds good. All right, well, let's jump right into today's momentum plays then. And with the first one, we have APA Corp, ticker symbol APA, to the upside.
Nice move with earnings today. If APA can end up breaking through resistance at 23.76, then watch it up.
With the next one, we have D-Wave Quantum, ticker symbol QBTS, to the downside.
Yeah, big pullback with their earnings down 8.4%. If they fall down under $28 even, then watch them down.
And then with the last one, we have CoreWeave, ticker symbol CRWV, to the downside.
Yeah, poor CoreWeave getting hit hard as AI and chip stocks start to fall. If CoreWeave falls under 104, watch it to the downside. And I will say it's getting awfully close to that $100 psychological level. That might act as a pretty decent target for tomorrow.
All right, so we have these three stocks on the radar for potential continuations if and only if they break through the levels listed. You guys know the drill. Protect yourself above anything else. If you need help with that, check out the first link or just the whole channel in the Key Lessons channel in the StockedUp Discord. It is completely free, so definitely check it out. There's a lot of great information in there. And Tom, let's jump right into today's $1.2 million big money trade, and we are looking at ticker symbol XRT. So today, the trader here bought the 77 strike put options that expire on December 19th of 2025. This is actually a continuation of the already existing XRT big money trade that has been doing pretty well. This is also, for our more advanced traders, a put debit spread where they ended up shorting the 70 strike put options. Either way, this is a bearish trade where they want the stock to go down. They are risking $1.2 million to make around $4.6 million. Looking at this setup, the retail area of the market has been relatively weak, and it's especially vulnerable given this economic environment and a weakening market overall. I think it's an interesting setup. It has a fair amount of time to it, but nothing like too overwhelming. The strikes are reasonable, and I'm excited to see how it does.
Yeah, we're really seeing, I would say, retail downtrend here in the short term, especially looking at XRT, the ETF following retail. If we actually go and we look at some of these companies like Costco, Walmart, Target, they have actually been starting to turn over quite a bit here. Now, whenever I think of XRT, of course, being a retail ETF, it is one of those things that, whenever we start to see pressure on consumers, we could end up seeing some true fluctuation here. And I think that we're actually starting to see that shake out with the drop over the past couple of weeks. And yeah, really good start to the last big money trade on this one, and I'm glad to see them continuing this. It has a little bit more time going out to December 19th, and it's another good spread trade as well, with the 70 and 77 strikes, with the 77 side of it actually almost in the money. If we get another good drop like today, we'll be right there. So overall, I think it's an awesome trade here, and XRT is in a great downtrend. There is a good support around that like 76 to 77 point where we could end up seeing a short-term bounce, but I think nonetheless it could fall down quite a bit more.
Sounds good. So let's keep it close on watch. And if you guys are new to the channel, welcome, and definitely consider obliterating that subscribe button. Every single day we do a lot of research to cover basically everything you need to know in the stock market, whether it be breaking news, upcoming earnings, economic events, jobs data, historical statistics, big money trades, SPY levels and analysis, and basically everything you need to know every single day. If you subscribe, you'll get our videos recommended to you more often, so definitely consider doing that. And let's also give a giant shout out to today's member of the day, Johan, in the StockedUp Discord. This is actually the same shout out from a couple days ago, but we had to do it today given the number one, great profits, but two, and more importantly, the smart, long-term oriented trading habits. He said, learning to double down when my predictions are A+ setups. This is a great, smart, long-term oriented trading habit to have, of course, along with risk management. Either way, we definitely wanted to shout out Johan again. It's great to see posts and improvement like this, so keep on rolling. And if you guys are into short-term trading, definitely check out the StockedUp trading floor. We can see today the Surge bot had some pretty good put action with some ELF puts that popped up by 305%. Some Circle puts that popped up by 204%, some Celsius puts that popped up by 196%, some CRM puts that popped up by 176%. The list goes on, and of course, there were a handful of duds sprinkled in there as well. You get full access to our army of custom trading robots, weekly live events, daily big money trades, and more tools than you could possibly ever need for trading. You can save quite a bit with coupon code BIGMONEY as well, so definitely check out that first link in the description and the comments down below. We should see a lot more explosive price action over these next couple of weeks, especially with everything going on with the government shutdown, and this time of the year does tend to get pretty volatile, which is good. So definitely check it out. Looking at the market right now, it should be an exciting next couple of days. Thank you all so much for watching, and let's crush it in the market tomorrow.